Hello and welcome to another Smaulgld live stream. Today is February 25th. It's Tuesday evening, 2020. And tonight's topic is silver, gold, and the coronavirus. Now, sometimes when an argument is made, it's usually based on an assumption. If you make the wrong assumption, no matter how good your argument is after that, no matter how well crafted or researched, you basically just could be wasting your time. And I think in a sense, that's what we've seen the last at least 10 years from the silver community, pumping silver on the wrong basis. And let me give you an example. We're going to tie it into what's happened recently with the gold price and the silver price the last year, last month, last few years, and tie that into what's happened with the coronavirus. The assumption that people have been promoting silver for so long now is that silver is basically money, just like gold is money, and therefore, because they're like money, they're the same thing, therefore they're valuable, and people don't realize, or once they do realize, that silver is money just like gold, and since the two are really the same thing, the ratio should be, well, let's say 16-1, because that's where it was 150 years ago, that's where it was 100 years ago, when the government set it at that level. First of all, that's one point they miss. And their assumption is that, first of all, gold and silver today are not money. And even if you want to argue that they are, you have to look at them. They are still held in different percentages as money. So, for example, gold is held by central banks as an asset. It is valued as a reserve asset on banks' balance sheets. Silver is not. Also, neither silver and gold are used as a currency, but let's not get into, we've done this before. I debated David Morgan on this. This is actually not a relevant argument whether gold and silver are money at all. What's relevant is whether gold and silver are anything like each other or enough like each other so that the gold-silver ratio is something to pay attention to. So, gold, as we've stated many times, has a different investment profile than silver. A gold investment profile is about 40% pure investment, people buying bullion, central banks buying bullion, and holding it in ETFs, and about 45%, the largest percent, is for jewelry. 18-karat jewelry, 24-karat jewelry, and we can assume that a good portion of jewelry buying is a form of investment. Some directly, if you ask them, they're saying they're holding it for investment, especially in places like India where they hold gold and then hand it down from generation to generation. It's certainly an asset. It's certainly an investment. So the bulk of gold's demand, 40% investment, 45% jewelry. We could safely say at least 80% of gold buying has something to do with purchasing it for a store of value, as a safe haven, as a solid asset. Now, silver, on the other hand, the bulk of silver is purchased for commodity purposes, to make solar panels, to make electronics, to make other industrial components, and about 15% of silver that is purchased as investment bullion, and about 20% purchased as jewelry. Now, a lot of silver jewelry is throwaway jewelry. It's not kept under lock and key. It's not passed from generation to generation. And as a lot of silver pumpers have pointed out, a lot of silver just gets thrown away, gets unused. It's an electronic waste, and it doesn't all get recovered. And that's all true, but that's an indication that the value of silver is not valued as much as gold. Also, so the percentage of silver that is purchased for investment purposes, only 15% of silver's overall demand, but silver's overall demand is far lower in size too. It's far smaller in size than gold's demand. So not only do you have a small percentage of silver's total demand in investment, that overall demand is far smaller than gold's. Now, if you take it, once you start to look at it that way, the whole idea that silver and gold are the same thing and that gold and silver are money, period, and therefore the gold-silver ratio is out of whack, No, it's not out of whack. It makes total sense, and I've been saying this. Now let's take a look at some charts. I've been saying this for the last 7-8 years, and people, the silver community, ridicules it. Who is this guy? When I was on SGT Report a couple of years ago, and Bix Weir and others were saying he doesn't understand silver. No, I think somebody else doesn't understand silver when you have this dynamic where they're insisting that the gold-silver ratio is out of whack, and yet, the gold-silver ratio continues to rise steadily each and every year. You know, we've been hearing it's out of whack, unsustainable, trade gold for silver now. I can go through over the last 7 or 8 years where they're pounding the button that you've got to change your gold for silver right now because the gold-silver ratio is at 60 to 1. The gold-silver ratio is at 70 to 1. The gold-silver ratio is at 80 to 1. You got to switch your gold out for silver. And then you get these other nonsense stories about JP Morgan's buying silver. I mean, it's just made up stuff, but people believe it. And this is what you call a huge echo chamber. People binge watch these videos. They insist. I was looking at a recent Mike Baloney video, and underneath the comments are like, I'm so glad I've been stacking silver for 10 years. Now, I don't know why someone would be glad to have the worst investment for the last 10 years, but they're convinced that silver is rarer than gold, and silver is so useful in our lives. And without the whole story that silver gets used up and it's at the bottom of some goofy pyramid, but it's not really because it's gold, but yeah, it should be silver. And look at this 10-year gold-silver ratio. This is, I wouldn't say the chart is a fact. Well, it actually is a fact. The fact is that the gold-silver ratio has skyrocketed. It's well over 90 after today's price action, and you can see it's gone straight up in the last 10 years. There is a reason for it. Now, they try to insist that once you go down with the assumption that gold and silver are the same thing, and gold and silver are money, which they're not, but even assuming they're the same thing, silver is a much smaller market. The part that people use for investment is much smaller, but they insist that the relative rarity, they say, but still, silver comes out of the ground only 8 times more than gold. Now, first of all, there's a reason why only 8 times the amount of silver gets pulled out of the ground than gold, because that's the amount that's required to meet demand. Let me repeat that. It would come out of the ground at a much higher rate if there was a greater demand for it. It's not like there's no silver that they can get out of the ground. There's no reason to get it out of the ground. Certainly not at $18 an ounce, there's not. So the fact that it only comes out of the ground at 8 to 1 or 7 to 1, that doesn't mean the price should be 8 to 1 or 7 to 1. The amount that is mined is a function of how much silver, new silver, is needed to meet the demand that we have. Now, one of the things that they really don't understand about the demand for silver is they keep saying silver is so useful in our lives, and it is used in electronics. Well, the amount of silver required for electronics the last 5-10 years has gone down. They've managed to thrift it. The same with the solar has also been something that they've been talking about. You need to have silver to put in solar panels, and solar panels are beginning experiencing exponential growth. Well, yeah, but they're using less and less silver in each solar panel. So the amount of silver required in solar panels isn't doubling and tripling with the amount of solar panels as they double and triple. It's only going up 7-8% a year, and it's a very small amount. So the idea that somehow silver is rarer than gold, or silver only comes out of the ground at 8 to 1 and should be at this ratio. First of all, as we said, that number is where it is because that's the amount that needs to come out of the ground. If there was greater demand, it would come out of the ground at a greater rate. Would that mean that the ratio should be higher? No, they wouldn't argue that. But also, we've discussed many times, relative rarity is not unless you're dealing with apples to apples, relative rarity is irrelevant. And the classic example is platinum is far rarer than gold, and yet platinum is like almost half the price of gold. And I use the example, I've made 3 or 4 paintings in my life. Picasso literally made thousands, but should my paintings be worth more because there's fewer of mine? No. I mean, you really have to be an ignoramus to think that. But once you start to listen to these pumper videos, Silver is rarer than gold. It comes out of the ground at 9-to-1, and therefore the silver to gold ratio is out of whack. No, it's not. And as we see, now let's talk about the coronavirus. If silver and gold were the same thing, and when people get nervous about a war, about a pandemic, about inflation, about something, international investors, the largest safe haven market is gold. Gold is a larger market than silver by exponential amounts. And when people move into a safe haven, it's gold. Look at the gold-silver ratio just in the last month. It went from 86 to 91.17. Why? Well, if you see that chart, let's take a look at the gold price. In 1 month, the gold price has skyrocketed. Silver, let's look at here. Let's look at the 1 year instead of looking on the granular level. This chart shows you that gold just a year ago was around 13.25, and now it is 1671, and you could see it's up 24%. Silver has not performed, does not have that type of chart. The 1 year silver price, look at that. Yes, it went up from about 14. It started the year at 16, a year ago, about 16. It's now at 18.5. It's a nice move, but look where it is compared to September, October last year. It's below that level. Silver reached $19.31 over 6 months ago. It's not there now. 6 months ago, where was gold? Let's take a look at gold 6 months ago. Gold was about 1,500. So you can see that all of the issues that have been under the surface for a decade now, too much money printing, unsustainable debts, low interest rates, negative interest rates, geopolitical worries, war with Iran, Chinese trade agreements, no Chinese trade agreements, political uncertainty, Trump impeachment, coronavirus. These are the types of things, if they appear to be getting out of hand, will give gold a bid. They don't necessarily give silver a bid. Now, this has been a constant theme, and I think it's been very predictable and has shown us over the last 50 years how to track gold and silver. Now, I don't have the charts tonight, but we've shown them to you before. Silver's had 2 spike periods in the last 50 years. And everyone says, oh, you're cherry picking your periods. No, yes, I am. The reason I cherry picked the last 50 years is because that's when you can compare gold and silver, not as apples and apples, but on an apples to apples basis. What I mean by that is prior to 1974, Americans couldn't own gold. Okay, so anything before then, from 1933 to 1974, really skews whatever the gold-silver ratio might have been. Because if Americans can't own it, well, you got a problem. Well, the other problem was not only could Americans not own it, the price was fixed by an act of Congress, the Gold Act of 1934, at $35 an ounce. So you can't say that the gold-silver ratio should return to any ratio that might have existed between 1934 and 1974. In fact, even in the 40s, when the price was fixed at $35, the gold-silver ratio hit 90-1. But think about it this way. The price of gold was not allowed to rise, whereas silver was manipulated to a certain extent to keep it in line so that the price of the money, meaning when they put it into coins, that it pretty much maintained the value. But the point is that from 34 to 74, there was definitely a difference between gold and silver. In fact, gold and silver really haven't traded as money on an apples to apples basis and able to compare them apples to apples. Really, you have to go back to the 19th century when the United States itself actually had set the gold-silver ratio at 15-1. And there's a lot of backstory politics behind that. But that wasn't a market price. It wasn't because silver was 16 times more plentiful than gold in the crust, and therefore that's what the price would be set by the market. That's just the rationale that the government used in order to set the gold silver ratio in order to have a bimetallic standard. Now, bimetallic standards are unwieldy, and we're not going to get into that right now and why they did it. And there's a whole backstory to that as well. And if you go to, I think on Smaulgld, I have the history of silver. You can find lots of information on that. The point being is when the gold-silver ratio was 16-1 and it was based on the relative rarity, it was a fixed number. No different than when the price of gold was fixed at $35. But now that we have a somewhat, I wouldn't say we have a free market in gold and silver, but we have the same exact dynamic for gold and silver, meaning since 1974, Americans can buy gold, and since 1974, Americans can continue to buy silver. Also, silver was taken out of the money, out of the currency, out of the coinage in 1965, and gold was taken out of the coinage, out of the currency in 1933. Therefore, gold and silver, as of 1965, were no longer circulating or no longer being minted for use in everyday exchange. By 1968, the United States had sold down most of its stock of silver that was required to redeem silver certificates, and they said no more redeeming silver certificates. The U.S. sold off its silver stockpile in the 80s, and therefore, silver isn't even at the same level of gold in the post non-use of gold and silver as currency as gold is, because presumably the United States still holds 8,133.5 tons of gold as reserves at the U.S. Treasury, whereas they hold no silver. And the same is true throughout the world. No central bank holds gold. Now, a lot of silver pumpers will point to pictures of vaults in Russia where they have silver. That doesn't mean countries don't have strategic stockpiles of silver or any other metal. What they're missing there is when Russia reports its gold reserves, and you can go to their website, they list the amount of gold they have on the central bank's balance sheet. They don't put oil on their balance sheet, and nor does the United States. They don't put copper or tin or zinc or whatever other metals they might have in reserve. That's the point. Silver is not considered a monetary metal by the central banks. Now you could say, well, I think it's money. Okay, that's fine, but you and how many other people actually use silver as a medium of exchange? And even people who like gold, they know that they can't use their gold as a medium of exchange. In fact, they don't want to. If you go to Gresham's law, if this is the whole nonsense behind gold back yuan, just sell oil for yuan, and then the Saudis are going to take their yuan and get it exchanged on the Shanghai Gold Exchange for gold, and China's just going to let that happen? No. Gold is no longer suitable as a medium of exchange. It's suitable as a store of value, and that's a good thing, as Bernie would say, because of the money printing. You don't want to return to where gold is the standard, because when the gold is the standard, the government owns the gold and the government controls the price of gold, and you don't even know what they're doing with it. So I never understood that article. We have to return to a gold standard, and that's going to stop all the profitlessy. No, they just keep repricing the price of gold, and they just keep printing more money. Now you say, well, that's a good thing because my gold price will go up. Not if they don't let you own it, like when they had the gold standard in the Bretton Woods Agreement of 1944, when only central banks could exchange gold for dollars. Getting off track there, but the point being is that the gold-silver ratio since 1974 is where I choose to discuss gold and silver, because that was the year when not only could Americans begin to buy gold again at the end of December 1974, that's also when they introduced COMEX gold and silver trading. Now, you can argue manipulation all day, and I'm not going to disagree that there's manipulation in the gold and silver markets, but there's no indication that there's any more or any less manipulation of the gold or the silver markets one over the other. They're both manipulated. Now, it may be easier to manipulate the silver market, but remember, a lot of these manipulation charges that we've seen in recent years, a lot of it has to do with boosting the price, lowering the price, just basically batting the price around, not necessarily repressing the price. And if there really is a metal they want depressed, it has to be gold, because that is considered the safe haven. That is globally, if you turn on the news, they're talking about coronavirus, they're talking about war, whatever they're talking about, gold is mentioned as the safe haven, not silver. And I think that's something that the silver crowd doesn't understand, that silver is not even, it's not even in the same league as gold when it comes to a safe haven. Now, the good news for silver is, while it doesn't have this fantastic looking chart, and you do have the gold silver ratio spiking, the gold silver ratio will come down, not because it's unsustainable and it's out of whack and it comes out of the ground at 7-1 and silver is so useful in our lives and silver is rarer than gold, and it's none of that. What's happened since 1974, the two times that silver spiked, and remember there's two ways that silver can spike. It can spike just like copper or platinum or palladium on a commodity bid, meaning the supply-demand dynamic gets, quote, out of whack, but really out of whack in terms of how much there is in supply and how much there is in demand. That's what you're seeing in palladium. There's a lot of demand for palladium, which, by the way, the coronavirus could really harm palladium's price. How and why? Well, palladium's not a safe haven. The reason palladium is rising is because they need to use it in the diesel fuel, catalytic converters, and so on. Well, China's industrial production is down, as is its car production, which means that's going to loosen the demand, the supply, the pressure on the demand for palladium. So silver can rise if there's a real demand for it. Not just silver is so useful. They are finding more uses for it every day. That's irrelevant. You need to know how much silver is being required. They use it in missiles, and they use it. Yeah, so what? You can list 1 billion places where you can find silver. You need to know how much silver is required in all these thousands of wonderful uses. Colloidal silver, you don't need much. Yoga pants, you don't need much. So what's happened with the commodity demand for silver? It's actually down. The industrial demand for silver is down, as is the investment demand the last 5 years. So silver is not going to get on the horizon right now any type of commodity demand. There's no new uses for silver. People thought it was going to be solar. They just figured out how to use fewer and fewer ounces per panel. And electronics uses less silver than it did in 2011. So the only way that a commodity can get a bid is on a big demand boost, or sometimes there's a supply issue where you have mining issues. Now, in the case of palladium, it's the perfect storm. There's an increased demand and a decreased supply. There's only two places where they even mine palladium. Silver's not really in that situation. The demand is not increasing and the supply is relatively steady. The other thing silver can rely on for supply is secondary market. People holding silver, the price goes up, they'll dump their silver and they'll get the $20, $30, $40 an ounce for it. People don't have palladium just lying around in the same amounts that people have silver. So as a commodity, silver has not gone anywhere the last 10 years for the commodity reason, because there hasn't been any great demand. Now you hear all the pumpers say silver is in shortage and it's going extinct. Nonsense. They're doing 850 million ounces a year in production, and with no real incentive to make that much, to mine that much silver, because the price is low. All right, so if it's not going to be on a commodity, and remember, gold hasn't been rising on a commodity bid. Palladium has. Gold has been rising on the safe haven investment bid, the money bid, whatever you want to call it. The store of wealth bid. Well, but silver is just like gold. Well, no, it's not. It's a smaller market. A very small percentage of that small market is investment. But what has happened since 1974 is we've seen two major spikes in silver. They had nothing to do with an increased demand for commodities, and they had nothing to do with any type of real shortage in the mines. What it had to do with was the safe haven bid for gold was going nuts. In the 70s, you had massive inflation, Nixon ripping up the Bretton Woods agreements in 1971, no more backing to the U.S. dollar. You had massive inflation. You had two oil shocks. You had Jimmy Carter as president. Things were not looking good, and gold was on the rise. It went from $35 an ounce in 1971, 1974, all the way up to $800 in 1980. And silver from like 1979, 1980 ratcheted from under $10 to $50. And silver was considered the cheap man's gold. Not the equivalent of gold, not the same size market of gold. And it still was much closer in time towards its monetary history because it used to be in the coins up till 1965. And also you had a proponent for silver in the late 70s and 1980s. The name were the Hunt brothers. They were actually out there publicizing the fact that they didn't trust the dollar and so on, so they wanted to go out and get themselves some gold, but they couldn't because they weren't allowed to buy gold, so they started buying silver, and that's what they stuck with. So when gold took off, silver followed. Now, the next time that silver had a spike was in 2010, 2011. And that was the same thing. Gold had risen in the early 2000s from a few $100s an ounce all the way up to $1,900. Why? Well, there was the whole deficit issue that became widely known prior to the financial crisis of 2008. All through the 2000s, there were people talking about the massive debt that the U.S. had taken on, was still taking on unfunded liabilities. That was putting a bid under gold. And then the financial crisis came, and then the reaction to the financial crisis, the bailouts, the QE, then the world QE, ECB QE, China printing money, Bank of Japan, Bank of England, all doing all sorts of wacky things. And in the early 2011, gold peaked, and silver wasn't the go-to metal when the financial crisis hit, but by 2010, it caught its money or monetary or investment bid, and boom, all the way up to $50. So right now, we're looking, I believe, at the initial stages of the gold bull market. If you remember, I've been saying for a few years, gold really isn't going to be in a bull market until it hits that 1375 mark. And it did that mid last year. And if it did that, I said then we go to 14 and to 15, 16, and then it should be off to the races. And I also said that once gold starts its ascent, then silver will start to follow. But don't expect silver to rise at a faster rate than gold until gold is really closer to $2,000. Then I expect that small monetary component, that small 10-15% investment percentage of a very small market to catch a bid and actually outperform gold. That's when your gold-silver ratio drops. But it's not because, as we've seen, the last 10 years, it's been out of whack and it's been unsustainable and so on. No, in times where gold isn't going parabolic, unless there's some other reason for silver to go up, it's not going to do as well as gold. Historically, it never has. Or at least, I don't want to say never, it hasn't since 1974. And 1974, again, I picked that because that's when both gold and silver trade essentially about the same way. They both have COMEX. They're subject to COMEX. They both have the demand uses have been fixed. You don't have the photography as much anymore. That got swapped out by electronics. So you still have, even today, even though we've lost the photography commodity use for silver, we still have, for the most part, silver is still valued 70 some odd percent on its commodity use, not on its investment use. Now, what happens when gold's in a bull market is eventually silver grabs some of that money, rises, but in both instances, in 1980 and in 2011, the silver spikes were not long-lived. They spiked and they dived. Let's look at the 10-year gold price here. Okay, so you can see gold went parabolic. You can see it was $1,000 in 2010, and by mid-2011, it was at $1,900. Like doubled. You can see that. Then it did a classic bubble chart. It went down. Then it went kind of looked like it was heading back up. Almost a year later, it was back to 1,800. And then it fell off the cliff, and you can see it drives all the way down 2013, 14, 15. And by the end of 2016, it bottomed at about 1080, maybe 1050, somewhere around there. And now it's risen back up to 1650. Not bad. But look at the silver chart. That spike and then the dive, and then nothing. Take a look. Spike. Silver's at $15. Boom, goes to $50. And the same, more than doubled. Gold doubled, silver tripled. Then silver did the same thing. It looked like it was going to come back. But then that slow, steady grind down, 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 down. Bottoming, you would think, in 2016. But then looking like it bottomed again in 2018. But look where it is now compared to gold. It's not back near its echo bubble of 2011 and 12. It's still plodding along. It still hasn't even gotten as high as the mini boost we had with Brexit in mid-2016. So I hope people can clearly see here. When you hear these silver arguments, they're based on assumptions that aren't true. They may sound logical. Yeah, thanks for all you do. Thanks for educating us. They're not educating you. They're just telling you a story, and the chart tells you the story. History tells you the story. The facts tell you the story. The mining numbers tell you the story. The demand numbers tell you the story. The trading numbers tell you the story. Not someone on YouTube repeating something over and over again and then everybody echoing and parroting it. All right, let's see what you guys are saying in the comments section. Let me see what we got here. Oh. All right, here we go. Let me pull this down, pull that down, and who do we have? We got 21 people watching. Okay, we got Pablo. Pablo is mentioning that everything was down today. Now, that's typical. Gold was down today. The stock market was down today. Yesterday, the stock market was down over 1,000 points. And that's generally a rush to cash. People underestimate that. We had that in, what was the year? 2008, when the financial crisis hit. We had a big drop in the price of gold and silver, even though you would think people would rush into those as a safe haven. But what we've seen happen, and it happens a lot, is you get people rushing for cash. They sell everything because they may have margin positions, they may have need for cash, they may be worried they won't have cash for living expenses, so they sell even gold. They'll sell everything. But you generally see in those instances, then gold gets cheaper and it rises again. That's what happened in 2008. Gold and silver took a dive, but they quickly rebounded as the crisis deepened, and people put some money back to work, and they put money back in the safe havens of gold. And then later, silver. That's what I guess people don't understand. David Koss says, I guess one question is, and he's not listening right now, he said he has to go to bed. He lives in Europe. I have, is the coronavirus be a permanent game changer for gold or silver? I know he's being facetious with the game changer, but well, I mean, you can play out these things if you have a pandemic where you actually have something similar to the plague where large numbers of people die. Well, you're going to have lower economic activity. So silver get whacked, I think, because that's the bulk of its use, and if you're going to make fewer items because fewer people are going to be buying them because there's a slowdown in the economy, silver's a commodity that's just not going to do well. The only way silver survives any type of pandemic and it goes up is if gold just goes skyrocketing and people just decide there's not enough gold and they want to buy silver. So it really depends on how bad a pandemic is. Now, I'm not comparing this to the flu, but hundreds of thousands of people die every year of the flu. And that has not happened with the coronavirus. The difference is with the coronavirus is it's not the flu. There's not vaccines for it. And they are taking precautions which are adverse to the economy because they're trying to contain it. And when you put people in quarantine, obviously their economic activity is down. So I don't know if it's a positive for gold or silver. People are buying gold because of the safe haven status, but it's almost, I don't like gold to rise on that because those are short-term emotional decisions that I'm not sure make sense. Like when Trump takes out an Iranian, when he did that with that general, the gold price goes up. Okay, but why would that be long lasting? And people extrapolate what's going to happen. It's World War III, and generally that's not the case. All right. David says it's interesting silver hasn't done much. Well, I think if you listen to this whole, I'll say it's a lecture, but this whole YouTube, I find it understandable why silver is going to. You remember, I believed all this nonsense. You listen to some of those early Mike Baloney videos, and you're like, oh yeah, silver. Or you listen to the Chris Dwayne, oh, back then you had a silver denarius, and it was a day's labor, and you start to believe that stuff. But then when the price doesn't move, you have to start looking at things and say, well, wait a minute. What other parts of history have they not mentioned? Now, I don't think that they're disingenuous. I think they just don't know the entire history. Or they choose to ignore it or apply different amount of weight to some of the historical things that have happened in silver that I do. But it seems clear to me that if you were saying at the beginning of 2010 that this decade was going to be the greatest wealth transfer in history for silver holders, well, you got that one. Like, you couldn't have gotten that one more wrong. You got 100% wrong. It was the worst investment of the decade. Now, there's a reason for it. Gold wasn't the worst investment for the decade. If you bought gold, as we saw in 2010, you bought it around $1,000. Well, now it's $1,600. You're up 60%. It's not the best investment you could have made, but it's certainly what gold is supposed to do is hold and go better than inflation. You bought silver at $14, $15, and it's $18. You've really gone sideways. Yes, Rob Gibbs says you forgot yoga pants. No, I always talk about yoga pants. So useful in our life. Yeah, Michael McConnell, can you explain why silver is cheaper today than in 1980? What else is? Now, I've covered that before, Michael, and it is interesting. But remember, in 1980, it was in an extreme bubble. It just went skyrocketing higher, in part because of everything we mentioned earlier in this YouTube and the price of gold, and also because essentially the Hunt brothers had figured out and were trying to get as much silver under their control that they could find available in physical form, and that which they couldn't find in physical form, they were trying to lock it down on COMEX contracts. So that was a very unique circumstance. The real price of silver in the late 70s, before the ratcheting up of the gold price and the Hunt brothers, it was $8, $9 an ounce, $6 an ounce, $5 an ounce. So it has gone higher. Silver is useful and silver is valuable, but not the way the pumpers try to make it sound. Silver will, I believe, if gold skyrockets to over 2,000, will start to move much higher. But when gold was going nowhere, I was never expecting, you can go back to all my videos, was never expecting the gold-silver ratio to drop, as all these other people were saying. I was expecting it to continue to rise, and they were saying, you don't understand, it's unsustainable, it comes out of the ground at 9-to-1, how can you say that? Well, I just explained why I thought that. All right, well, I want to thank everyone for joining me. I don't know if my, sometimes the chat, there's some more comments. Yeah, sometimes that happens. Nope, there's no more comments here. Sometimes when I get off, then I see a slew of comments that YouTube didn't show me, but I'm in live chat. I don't see any more. So I do want to thank everyone for joining me tonight, and we will talk to you soon. If you like this video, consider liking it at least, or subscribe. I'm still at 3,990 subscribers. I've been there all year. Not just all year, but the last 12 months. So the channel is definitely either stymied by YouTube or just stymied by people not wanting to hear that silver and gold aren't set to skyrocket, and silver is rarer than gold and all the other nonsense. But if you like it, also please consider supporting Smaulgld. You can buy a Smaulgld mug. Mugs are real wealth. You can support Smaulgld by check or sending items of value to Smaulgld LLC, P.O. Box 714, Dover, New Hampshire 03820. If you are into cryptos, I will accept those as well at the QR codes that you see on your screen. Or you can become a Smaulgld Subscribe Star member. I got 5 there. I have to maintain 5 to get paid by Subscribe Star. Also, you can become a Smaulgld patron, or you can make a one-time or recurring donation via PayPal. I want to thank everyone for joining me, and we'll see you soon. That's a good thing.